Large U.S. banks help our country remain competitive on the global stage, in part by supporting U.S. companies operating overseas. Exports comprise over 10% of U.S. GDP and support roughly 9 million jobs. And large U.S. banks are a critical component to our domestic and global economies in two key ways. First, U.S. companies operating globally rely heavily on large U.S. banks for funding in sophisticated financial services. For example, a U.S. beer company purchasing aluminum overseas to make cans will need to transact in a foreign currency with help from a bank that makes large volumes of foreign currency payments. The company will also need to manage its exposure to foreign currency through foreign exchange derivatives, which requires a bank with expertise in that field. The nation's largest banks are the dominant providers of these services. Second, banks also support U.S. companies abroad by helping them issue debt and equity securities in public capital markets. When a company wants to buy new equipment, grow, or hire more workers, it often issues debt securities to borrow money directly from the public to finance its investments. The largest U.S. banks account for the majority of underwriting activity among U.S. banks, ensuring U.S. companies can make essential investments. Because some foreign governments have national champion policies directing subsidies to home companies, it's important that U.S. companies can access global pools of capital. The largest U.S. banks play a vital role in maintaining that access, allowing U.S. companies to remain competitive. It's important to note that while the largest U.S. banks serve these important roles, they are subject to higher capital requirements than their foreign peers, a disadvantage that can and should be addressed. Here and overseas, our largest banks are critical to U.S. companies in the U.S. economy.